What's going on, everyone? Happy Friday, happy Pi Day. I hope you have an enjoyable weekend ahead. And I just want to go ahead and talk about one trade that I took today that was just a classic textbook setup for me. It was really the only A-plus setup that I at least caught in the market. I know there were a few other trades that had news. PRPL had some options for trading that could have been good on the long side, but I found this good opportunity early on, and I want to go ahead and break it down for you. So let's go over the reasons that I took this trade. One, it was in the pre-market. It was, let's see, it was a little bit further down the list, but I was looking at it, around the 7:30, 8 o'clock time frame, and I did see that it was actually a higher percentage change. When it was over here, from like 29 cents up to 45 cents, give or take. So there was definitely some range on it in pre-market. I saw that it had news as well. They repaid a $9.4 million loan. And it looks like they were announcing a retiring of debt. So that usually is positive news for a company. And then if we could see here, it's got a free float of only 2 million. So it's a small market cap. They repaid debt that was larger than their market cap, and they free float. The number of shares publicly traded is under 4 million. So this is a tiny company, small float, and it was the flavor of the day, as I like to say. So let's take a look at it. We saw that it just continued to stair step. Pre-market just was setting it up for even higher highs. It broke over its pre-market high at 45 cents very early into the morning. And it just kept going up. I was trying to get buys in demand zones, but I wanted to see more 5-minute candles with confirmation. I started seeing it continue to climb up here. And as it was getting much higher over here, I didn't really want to play around with this range, especially since we see like a red candle here, but then it engulfs one green candle, then it goes back down, then there's two engulfing candles. But to me, this is just too high up. I want to see it come further down into previous demand zones. So what I saw on the 5-minute time frame that I did not actually see when I went on to larger time frames like the 10-minute, where we only see this demand zone here, which would have been a good trade later on in the day, but you would have had to stick around in the market a lot longer, was that there was a 5-minute demand zone perfectly situated here. Because we have a demand forming here, but then we have another red candle here. So what I like to do is, if there's two demand zones that are close to each other, just combine the two of them. And that became my demand zone. So I saw that this green candle engulfed this previous red candle, and then we had two other engulfing candles after this one. So I actually made my range a little bit lower here because I saw that could have been a good support area. And then I brought this down to the top of the body of that previous red candle. And then that became our range. So I want to say it was about 5% difference. So it was a nice and tight demand zone. 5.45% exactly. So I drew that out, and I was looking for just a nice, what do we call this? Panic candles that would bring it back into this demand zone. And we got that. It topped out at 68 cents. And then in one 5-minute candle, it made a disgusting move to the downside. Disgusting in a very good way. 26%. And that brought it right into the sweet spot. And that was where I was collecting my buys. I had some buys at 52 cents, in the 51.60, 51.20, and then down here, I think I just missed this buy in the 50.40s, and then I had it down to 49.26. And so I scooped up a nice average that was in the 51s and made a nice and quick move up to 55 cents. And that was about, at least where my average was, I want to say it was like an 8% trade. Yeah. So nice and quick move. That happened all in about 5 minutes, as we can see here. So just sticking to my demand zones, finding that area where buyers were going to be stepping in, where there was some consolidation here, wicks coming down, and then wicks moving right back up over that point. So again, I like to buy on the first test of the demand zone, and then I'm done with the trade. So I got my 8% in 5 minutes. Yes, this did make a big move higher, and you could have capitalized. But to me, I think the first bounce is always the best bounce. And anything after that, I don't think is as high of probability. However, this one would have proven me wrong. over a 50% trade, you obviously would have had to wait an hour and a half for that to occur. I prefer 5 minutes to get 8% than an hour and 35 minutes to get 50%, but that's just me. So I hope that this is helpful. Let me know if you have any questions, and I'm looking forward to being back with you on much more next week so we can trade together, go over some charts, and keep on winning. Stay groovy, y'all.